Amazon's really all about, I would say, a combination of sales and profitability here. So we're looking for total revenue growth of about 35%, slight moderation in the online growth versus Q3, but still strong growth. They had Prime Day in October as well, which should benefit them. Additionally, Amazon Web Services, we're looking for about 29% growth, similar to Q3. If you looked at Microsoft, it was fairly similar, Q3 to Q4 as well. We're looking for fairly stable growth in the 30% range. Advertising growth for Amazon, also looking for strong growth, right around 38% year over year, slight decel from Q3, but strong there as well. And then GAAP operating income, about 4.4 billion is the number we're looking for. They still have a bit of a headwind from COVID, but we think that those comps will get easier in 2021 as well. On the Google side, we're looking for net revenue growth of about 18%. That's actually an acceleration versus the 15% in Q3. Our channel checks generally indicating a re-acceleration of growth as the economy reopened. Specifically on search, we're looking for about a 5-point acceleration from 6% in Q3 to 11% Q4. In YouTube, looking for about a 7-point acceleration from 32% to 39%. On the cloud side, as you mentioned, looking for strong growth there for Google as well, about 44%. I think the profitability is less important at this point. We want to see them continue to grow at a healthy rate, and margins will come later.
For both of these companies, Aaron, we're going to come to a point where it's going to be more difficult comps. Both of them did pretty well during the pandemic, particularly for Amazon. So how does Amazon sort of keep the momentum going, and what is already priced into the stock at this point?
Yeah, definitely on Amazon, you're going to have tougher comps in 2021. On the e-commerce side, that was clearly a tailwind for a number of e-commerce companies. We are looking for moderating growth into maybe the 10 to 15% range, especially in Q2. However, as we talked about, you've seen a big headwind of about $10 billion this year on the operating income side from COVID. We think that'll ease in 21 as well. So even though revenue growth will slow, you're likely to get some profit improvement in 2021. On Google, you actually have the opposite situation. We had pretty tough, easy comps in Q2 as with Google search. People are doing less searches early on, specifically in the travel sector, which was a big headwind. And we're starting to see a re-acceleration in travel spending as consumers start to anticipate maybe traveling in the second half of this year. And so comps on the search side, as well as YouTube, will be fairly easy in Q2, and then get tougher as the year goes along, though.
How should we think about the pickup in travel and Google? You know, you don't think of Alphabet as a reopening play, but maybe investors should.
Yeah, especially, we think travel represents roughly 10% of their search revenues, and that almost went to zero in kind of Q2 of last year. And so that's kind of pure kind of revenues that should come back, especially in the second half of the year. But even we're starting to hear that travel advertisers are starting to come back at a healthy pace, even in Q1 here, anticipating that stronger second half recovery at this point. So specifically on the travel side, we do expect a stronger growth there, which should boost overall Google search volumes. That plus e-commerce continues to be the biggest part of Google search. We're expecting a pretty decent 2021 for Google search revenues.
Shepard Smith here. Thanks for watching CNBC on YouTube.